Pro. Give me 1 second.
Okay, you put the Pro in there, yeah.
I had to, man. I had to. You know what I mean? By the way, if any of you guys are going to sign up to any of these platforms or any of these
Use my
services,
referral code, yeah?
No, use my referral code. Use my referral code. I'll have you know.
If you use my referral code.
Yeah, what do they get? What do they get, bro? Tell them what they get.
Yeah, I'll give you
Go on.
$10.
$10?
Yeah.
Why would you do that, man? You actually
It's $20, but it's $20 profit.
Okay, all right.
And they get $40.
Okay, you know what? You're a waste man. You know that. Yeah.
It's okay. Continue.
No, unironically though, like joking aside, if you want to sign up to any of these services and you're not on them yet, get a referral code. Even if it's mine or Omar's or anyone else's, get a referral code because you'll get incentives, verification gets easier, and you get money off. So yeah, do that by all means. Referral codes for everything in crypto always. Even if it's not mine, just do it because it will more than often likely benefit you. All right, cool. Onto TradingView Pro. Give me a second. So my Discord is doing. All right, can you guys all see this? Yeah.
Yeah.
How'd you get yours looking like that? That looks sick.
Yeah, mate, customization, mate.
Yeah, you got to show me that because that is lit.
I will do. Yeah, no. So like, obviously, I've designed my. Let me just find a clear. Yeah, so I've designed my chart. Yeah, I've designed my chart. So my brain is just trying to process. I've designed my chart to look how I want it to look. Normally, the chart that you start off with would just be. I don't know if I have my old layout. Will be something similar to this, where you just get, as you can see, one of my old trades. You just get the. I mean, bro, look it respected the technical analysis. Yeah. Did it not? Where you just get the red and green bars, and you get volume like this. So initially, obviously, I was trying to figure out how to use this, and I thought I was sick by having two windows, and it just was a headache in the end.
Don't bang.
Yeah, that doesn't at all. But in essence, it looks like this, and you can literally customize everything. And I recommend doing it if you're genuinely trying to get into this seriously, so that it then will kind of looks like this. And this is my preferred view. I can see everything that I need to see within a time frame. I can clearly see the bars and charts and my indicators. And it also is easy on my eyes. It looks nice. So my technical analysis, or what I do when I'm charting a coin, very, very simply, let's take Atom, for example. Obviously bearing in mind the market's moving mad today, but I'll take a coin like this. And normally, for me to look at coins, someone will have told me, bro, this is going to go up 100%, or bro, this is going to go down. Or I might just be having a wonder because I'm seeing a coin a lot on Twitter. And so I'll look at it, and very, very simply, first thing I'll do is try and draw support and resistance. So I can see here that there is clearly on the 4 hour a massive resistance just here above 33.8. And you can identify that because you can see that there are, a lot of wicks that stop here. Also, I've got a little indicator here that shows me that this is a good place to have a resistance. And this is like my own personal indicator, but all it is just a similar moving average that I showed you on KuCoin. And then for support, again, I can see very simply down here that there is clearly a strong level of support here because it's bounced off it here and it's bounced off it here. And that is very, very simply how you draw support and resistance. I'm not going to give you a full-on technical guide on to do it. I posted the guide that taught me in the knowledge channel, so I can ping that for you if you want, or just DM me and I'll send that to you. But in essence, that is very simply how you would draw support and resistance. And you could break this down even further and try and find a mid-range by just looking and seeing, peak here. There seems to be a lot of resistance here. And then you can kind of just literally and the more you do it, the easier it becomes. But it's very much simply a case of looking at the range and looking where you're seeing these wicks stop out for to get the resistance, and likewise for the support. So that's the first thing I do. Then, if it's a case where I can see that there are a lot of wicks going downwards in a certain area, so this isn't the best example for this, but I know that there is a coin that certainly is. Where is ADA? Right, perfect. So ADA, this was done obviously prior. I don't ever delete my support and resistances, by the way, even if they get invalidated. I keep them there because it's just good practice. But so a coin like ADA, for example, this play here where I predicted that it would kind of bounce up. I saw that there was a whole load of wicks pointing downwards in this kind of area here, what that showed me was that this is an area of high demand. So people are constantly buying around this level. Now, ADA is not, in my opinion, like, it was a good coin initially. It had a lot of hype and things behind it, but then they just didn't deliver. And it's just kind of in this gray area at the moment. And so it's like, when I saw this, I thought, this coin's in a gray area, but yet people are refusing to allow it to drop below this point, obviously before all of this happened. So I thought, right, clearly there is a level of high demand here. What does that mean? That means that in essence, if we can break out of this zone here and then kind of go into this area here, there's a very high chance that we're going to see an uptrend or an upward swing. And you can see that I also backed that up by drawing a trend line, obviously when I made the play here. As in to say it was caught in between this range. And so I looked at that, drew my support and resistance zone, saw that this was an area of high demand, and made an entry anywhere in this box. Obviously, as you can see then what happened, it shot up. That simple, that easy. Didn't take me like a long half an hour, 45-minute thing to do. It's just very much just looking at the graph, knowing about the coin, and then making a decision based on that. Trend lines again, and other stuff like this, there's a guide on how to draw that, and you can easily find guides on this on the internet. But in essence, very simple case of where I'm seeing again, all these wicks are stopping out here. So I'm seeing that there's a trend here of there being pumps and the wicks are stopping. That speaks to me that for whatever reason, there isn't enough demand for this thing to be pushed above a certain point. So now I'm seeing two confluences or two confirmations. Confirmation number one, there's loads of wicks here at the bottom. Confirmation number two, there's wicks at the top. So it's like this thing is trapped. It's trapped in the zone. It's accumulating. Very bullish. And so then I made the ADA call, sent the chart, tweeted about it twice, and yeah, the rest is history. Made gains on that. And so that's a very good question. That is a very good question. So that one, Omar, do you want to share your thoughts? I've been talking bare.
No, I need to hear your, because I'm bad with this as well.
Okay, all right. So exiting positions. What I do honestly is when I see that the coin has pumped out of a certain range. So for example, with this ADA example, if I see that the coin had pumped, hold on, up to like here. I don't know if you guys can see that green arrow.
Mm-hmm.
So if I'd seen that the coin had, oh my gosh, magnet mode's on, that's why I'm getting cucked. If I'd have seen that the coin had pumped outside of this range here, so let's have a look actually, what's the percentage on that? Say I bought in here, that's like what, 10%? I normally trade with anywhere between 7 to 10x leverage on confident plays like this. So let's just say for argument's sake, this was 10%, right? And I had, say, a 10x leverage trade open or a 5x leverage trade open, let's say. So I'm now up 50% on this trade. So two things that you could either do. Number one, you could exit and just take the 50%, which is fine. You can do that. Number two, which is what I normally prefer to do, is I put a stop loss somewhere like here, for example. And I'm going to make that, just for this example's sake, I'm going to make that red. So I put a stop loss here. So what that means is then if the coin does continue rallying, which in this case it does, congratulations, I've now made, say, 100% on my money. But if for whatever reason the coin decides to then drop further, I then still make sure I'm leaving with a little bit of profit. So that's my favorite way to exit a trade. Obviously, in this case, it kept on growing. And so as the coin kept on going up, all I did was move my stop loss higher and higher and higher. And then eventually, when it dropped, the trade closed and I took profits. So that's normally what I do. There's another way that people do this where they like to sell on the way up. So they sell like maybe 10% here, 20% here, 30% here for a way. I just think that's long. I can't be asked to do that. So what I do is I wait for the coin to move, like half of the play to be made. So like if it pumps to here, then I put a stop loss normally above my entry. And you can do that for however much you're comfortable. And I think, honestly, that's the best way to make your exit because it just means if Bitcoin decides to just go poop and your trade goes to like here and then it drops, you still make money. So that's how I time or or make my exits. Emma, what's your thoughts, bro?
I mean, I haven't really been trading futures yet, so but that makes sense. Like
Yeah,
I've just been spot trading at the moment. I'm gonna get into futures soon though.
fair. And yeah, like I think just one thing to remember on that as well, is that there's this thing, like a lot of trading is mentality, and like I myself had to suffer from, like, I don't know, say a trade like I'm trying to find an example. Say something like this, for example, right? So say like I bought in, say like around here, and then it spiked, and say I moved like my stop to somewhere like here, and then as you can see, the coin dropped and broke through my stop. And say I made like maybe 10 or 15% of this, and then like I look back the following day and I can see that it's just completely shot up again. And I've been like, raw, like I could have literally doubled my money if I'd have just held even longer. And so it's like you have to remember that that's not the mentality to have with trading. If you're investing and if you're buying these coins and you believe in the future of these coins, 100% hold. But if you're trading, you have to remember the number one goal is to not lose money. That's the number one goal. It's not to make money, it's to not lose money. And I'm telling you this as the most optimistic Christian, like Jesus loving guy. When you're coming with futures and when you're playing with trading, the goal is not to lose money. You have to be pessimistic with this, because if not, you're just going to get eaten alive. And so as long as you make a trade and you don't lose money, you're winning. Even if you've missed out. That's the mentality to have, because it's like, yeah, okay, you may have missed out on the extra gain or whatever, but number one, like, you've made money. That in itself is it. Number two, you haven't lost money. And number three, you can always make a re-entry if you really think the play is that good. And so that's why, like, even this week I've been seeing Omar been absolutely killing it with calls in charts chat. And like I feel like a lot of times I've left a bit of money on the table this week, because obviously you had Gala doing bits and all sorts of madness. But it's the thing of where I just had to sit back and just be like, yeah, okay, all right. Like, I've missed out on making money, but I had more important things to do. And I haven't lost money. So there's no reason for me to feel like bad or whatever. And so, like, a big part of trading is psychology. And so, like, yeah, like, that's why when it comes to making exits, I very much just, the moment I see a good enough profit and I'm happy with it, I put a stop somewhere. Personally, personally for me, I try and make 20 to 25% a day. Whether that's on one trade or two trades or three trades, that's the goal. Obviously, of recent, because Bitcoin's been doing a mezzanine, as you guys well have seen, doing an absolute mezzanine, it's been kind of hard to. But normally, consistently, I try and 20 to 25% a day. And once I'm comfortable doing that, I will then grow that number. But I'm not like some people who you see that are trying to go for the 100x, 500x. That's just not what I think is suitable for futures. If you want to do that, go and do spot and go and, I don't know, buy meme coins and shit coins and all that stuff. Yeah, literally. So yeah, like, that's in essence how I do my TA. What I do and my strategy, just for complete comparison, what's the word?
Transparency.
Transparency. Thank you. Transparency. Yeah. What I do for complete transparency, supply and demand, which is obviously what I showed you with the wicks. Support and resistance is what you can see here with these lines. The two indicators that I use are RSI, which is the GOAT, the absolute GOAT. If you don't know what this is, learn about it. It's the absolute
Actually,
GOAT.
on that, right? I can give a good example here of using that. So the RSI, right? For those that don't know what it is, the RSI, it measures momentum in the market, right? Price momentum. So when you see the RSI going up, it means that the average gains are greater than the average losses. And when the RSI goes down, your average losses are greater than your average gains. So it just measures the momentum of the price movement. But a good way to use this, because a lot of the coins that you're going to be looking at are not like Bitcoin, so they're very volatile. It's difficult to trade just off seeing let's say the RSI goes down and you're like, oh, it's gone down, now I'm going to long. It could go down more. So one good thing to do is backtest your RSI, right? So you see right there where, like, yeah, that part, right? Right there where it's low, where you see it that low, look back previously and see how it's reacted when it was that low before, right?
Mm-hmm.
So let's say it hits a certain level, you can go back through time, see where it hit that level before, and then see how it reacted after, and that back test can act as confirmation for a trade that you want to put down, for example. That's
Yeah.
a good way to use RSI. for me anyway.
Literally what Omar said, 10 out of 10, like spot on. Why does it keep drawing? Oh, it's for the pencil tool.
Maybe.
Yeah.
No, go on. You do your thing.
Yeah, no, perfect example there. And I mean, this is kind of like a bit of an example, but I can't be asked to go back through and look at the last time it dropped that low. But you can see here clearly, or because we're in a flipping, I don't know what Bitcoin's doing at the moment, man. But you can see here, like
May 21, actually. May 21. Look what happened at May 21, because that's when it last.
I'm gonna have to go on days, bro.
Yeah, go on daily. Go on daily. Look at May 21 and look how price reacted. And this is like perfect confirmation.
Okay.
It didn't dip. RSI hasn't been this low on Bitcoin since May 21st. Oh, sorry, not May 21st. May 2021.
Hold on, I might have to readjust.
There you go. See, look at that. Look at that. You're there.
You know what? You're making me readjust my charts, and I don't want to. Bud, you bad. Like,
just have a look. Just have a look to the left.
Okay. Hold on. I'm gonna readjust my charts just for you, Omar.
Right. Have a look at the RSI on May 20.
So yeah, May.
Back.
There. Yeah, it fell through the floor, dude. Holy.
Right.
And the MACD is awful as well.
Yeah.
So it's sitting at what? 20, almost 22?
Yeah.
Yeah, roughly around about 22.
Around about the same place.
Horrible.
But yeah.
And so, like, obviously, as Omar rightly said, you can see the RSI has dropped here. And then shortly following afterwards, it's shot up. And so, like, you can use that and see. Obviously, I'm not telling you to buy Bitcoin now. Oh, ruined my charts, Omar. I'm not telling you to buy Bitcoin
You'll
now.
Survive. Just Control Z.
Yeah, that's what I'm doing. Hold on.
Maybe it'd be beneficial for me to go through what I've been doing as a complete beginner, because I have not. You're coming with all this experience, but
for sure, bro. For sure,
I'm assuming
here, man. Like,
because I've only been in crypto for 2 months, and I guess my background has been sort of like messing with data stuff and analysis. So maybe let me go through one I've been doing.
Go on, share screens, bro.
So there are a couple that might be good based off the recent ones. Can you see?
Going on to yours now. Jeez,
you see this,
what I was going to ask you to show me, like, you're full on how you do the Fibonacci and you do the spaghetti lines.
So basically, I don't understand.
Pause. Why the hell are you using TradingView in browser when you pay for it?
Is there an app? I don't know.
Yeah, I get that. Okay, right. You don't
okay.
I'm about to put you on blast. All right, you're forgiven. Go on.
Okay. I remember I just got a moment ago. Yeah, relax. I haven't had time to do anything. So essentially, this is all I'm doing here is pattern recognition, right? Forget all the technical analysis stuff. When it comes down to the bare bones, as a complete beginner, try and recognize patterns, I would say, is the main thing. So, for example, here I saw a downwards trending channel, right? So I looked back on the daily chart, looked back through the price history, another downward trending channel, another downward trending channel, right? So I charted them out, and I saw that every time these downward trending channels, the trend line was broken, it went on a good run. Here again, it broke the channel, went on a good run. So then here, when it broke the channel, we had this initial spike, and then obviously Bitcoin did a mazzoline today, so it did a madness. But you could have made good money off this long if you saw that it was breaking this trend line and you longed here. That's decent money. So that's one example of like following the pattern. And I'd say this is like the idea that I've been using for now, is just try and find patterns that you can kind of see, and then backtest everything. Backtest for confirmation. So if you see a pattern but you're not sure, backtest and see what a similar pattern is done on this token as well. And then another one is VRA. So yeah. So similar thing, right? Almost the same idea as Matic. Oh, fuck. Downwards trending channel. I see it's downward trending. I backtest it. Broke the trend line, went up. Confirmation of this. Here, broke the trend line. And it gained like, I think it's close to 20% off that. And then the fib here that I've used Fibonacci.
Show us how you got that, bro. That's what I want to know.
So what I did is, so I don't use Fibonacci much, and I'm very new to using it. So this was sort of to see how price was moving and where it was bouncing off, if it bounced off anywhere, sort of thing. So I
respecting the levels really nicely, dude. That's what I'm
yeah.
Yeah.
So what I did is I just found the lowest point of recent. Like you can do it over here or over here. I just did it over here, and then I drag it up to the top point over here, and then I just see how it bounces off levels. So what you can see is that before, so if you see my support is here, right? And then this trend line is almost acting like resistance. So when I see on this fib that it's bounced off and it's sort of respecting this 0.5 fib line here, and it's bouncing off, see it's bouncing off. And then you get a lot of pressure building here because it's at support, but it's also got resistance from this trend line. So what happens is once it breaks this trend line, it's got nowhere to go. So the buying pressure builds and it just goes up because people are not there's buying pressure and selling pressure, but the buying pressure is like outweighing the selling pressure here because of the way the trend line works. And then it sort of just breaks through, and then that's that done deal, mate. But I guess the main thing if you're starting out is don't get overwhelmed by all of the different types of wedges and bullish patterns and bearish patterns, because I mean that was the one thing that put me off doing it. Just literally go in and just chart random shit and look for patterns and then see how price moves. Like most of the stuff that I've done, I haven't put any money in on. I think like Gala was one, right?
No.
Yeah.
So this right here.
I'm just saying to validate you, bro, because like your analysis is 10 out of 10. Like I've made money off your calls, bro. Honestly, so
this was insane. Right. This was insane.
It's almost like he gets paid to analyze market trends.
I know.
Yeah, it's almost like it's his job.
I mean, it is essentially my job, but it's sort of like, yeah, kind of.
So you invest with insider information as well.
Yeah, you give you all the government shit. So, so here I saw that
call was insane, man.
This was sort of accumulating. I saw it bouncing and it was accumulating. It's sort of like a symmetrical triangle forming, right? So I sort of just drew the trend lines. And then there's a pinned picture that Alex has in one of the knowledge channels. And I just drew the trend line. Yeah, I drew the trend line. And then I went back to that and I saw if there were any patterns matched. And I realized like this is sort of like a symmetrical triangle forming here. And then I realized what's going to happen is the buying and selling pressure, you can see the wicks, right? The buying pressure builds up and then it just sort of accumulates. And then when we get to it, it just explodes and it just went nuts.
Hell yeah.
And I think one of the most bullish indicators on the whole, like not even just per se, but one of the most things that is the most bullish that you can see in crypto is accumulation. When a coin is accumulating, something is going to happen. And the reason why is because, go on. Yeah.
What? This?
Yeah.
Yeah, it could be. This similar, yeah. Yeah, very similar actually.
Yeah, you could plot that even
similar
from the second peak. So from that second peak there, yeah. Even like just yeah. Very good.
It kind of works, yeah. But that's the sort of stuff that you want to be. That's the sort of stuff you just like eye stuff and see if it makes sense, and then just draw it, and then see what happens.
And yeah, like as Omar's demonstrated, those wedge patterns are insane because the very nature of cryptocurrency is that it's supposed to be volatile. And especially these little these little altcoins. Altcoins are ridiculously volatile. Like you're seeing 10 to 15 to 20% movements on a daily. So when you see a coin accumulating like that, normally it means two things. It's either going to shoot up or it's going to shoot downwards. And so like that's it, Omar. You've pretty much hit the nail on the head. Read the accumulation stuff. And also as well, I liked how simple you kept it, because I think a lot of people, they come into trading and they have all these indicators and have all these candles, and like obviously that's stuff that you want to learn over time. But trading is very simply just looking at a graph and spotting patterns and drawing lines. It's very fun. I find it quite fun.
Yeah, the most important thing for me, right, is that you backtest your theory, right? If you don't backtest, if you backtest your theory and there's nothing there to indicate that it's happened previously, then you have less confirmation that it's going to happen in the future. So if you have an idea that something or like a pattern is forming, you want to backtest and see if that pattern is formed previously, and then use that as confirmation for what might happen in the future. Backtesting has been very helpful. So the date, so basically, your TA is going to be more accurate the longer periods you have, right? So, for example, a 1 minute chart isn't going to respect like wedge patterns and anything like that. But if we go to Bitcoin, for example, right? Where the fuck is Bitcoin?
Bro, you gotta organize your watch list, man.
I know. I'm going to. Am I being blind? Is that a bottom? No.
What the?
So, I mean, if you could do TA on this, you're a fucking legend, because this is like, I mean, you can see like finding patterns in this is like ridiculous, and is not really helpful. And it sort of works like that all the way down. So like you can go, if you take the daily chart, for example, this has more data behind it, right? Each wick has more data behind it compared to a 1 minute chart. This is a whole day of data compared to just 1 minute of data. So when you're doing TA on this, stuff like this, so just for example, right? Let's say I see this here, I can draw a trend line at this, right? If I did this in a 1 minute chart, it might just go up, break the trend line, then come back down, and go up, and then come back down, and then your TA would be invalidated on that 1 minute chart. But you can't really. I don't like to do anything past a 15-minute chart at the complete minimum. But I like the 4-hour chart. Has been quite nice. 1 hour chart, but the day chart has been. I mean, the day chart is just so.
So just to add to what Omar's saying, and this is the beauty of trading. Like, you can have different ways of doing the exact same thing.
Right.
For me personally, my absolute bread and butter is the 1 hour chart. I absolutely love the 1 hour chart. 1 hour chart is where I mostly do my TA. But literally, as Omar said, everything Omar said was absolutely correct. The lower down in the time frames you go, the harder it is to do TA. So the reason why I love the 1 hour time frame is because I, not in an arrogant way, but I have a fair bit of experience when it comes to, and I have a fair bit of knowledge when it comes to trading and how charts move and operate. And so I find it very comfortable to operate within a 1 hour chart. But when I first started off, all I would do is look at the daily chart. And there's nothing wrong with that. Like, if I'm trying to gauge what's going on, like my BTC chart, for example, the whole reason why my chart got thrown off there when Omar was getting me to analyze May was because when it comes to Bitcoin, I still stick with the daily or the 4 hour chart, because it's a thing of where it's like, no matter how much you are always going to find out or be able to gauge market sentiment better with the most amount of information possible. And in order for you to get the most amount of information possible, you need to have the biggest time span possible. So you want to be working with those bigger hours or time frames. And so if it's a case of where sometimes I may even go on and look at the markets, if I want to try and gauge what's going on, I will always look at the 4 hour or the daily. I only ever go into the 1 hour when it's time for me to actually try and make a trade. I don't know, Omar, if you use any of the 5 minute or 15-minute charts.
Well, I would if I was getting into futures, but because I've just been spot trading at the moment, just buying, literally all my TA at the moment has just been finding good entry positions on coins I want to hold, essentially. Like that's been the base of my TA. But what I'm going to get into at some point, hopefully soon, is I'm going to develop my TA on maybe like some of the smaller time frames, maybe on like the hour chart and the 30-minute chart, and just build up some ideas for longing and maybe shorting coins and making money that way as well.
That's completely fair. And what Omar's shared, by the way, like even just this, in essence, and this is the beauty of trading as well. Everything you learn here can also be applied to when you're investing as well. So the very fact of the matter is, you can see like Omar's been doing these charts for spot trading, which is just investing and holding coins. But I've come along, seen what Omar's done, seeing that the charts make sense, and then just open up future positions, timed my entries using my own kind of thing, and then just made money from it. So it's a case of where, irrespective of whether you have no, like, you know, you're not sure whether you want to do futures or spot or invest, as long as you know how to do some kind of TA, you can make money. And so, like, yeah, it's beautiful in that regard. Personally, just on my side, I will normally, when I'm trying to enter a coin, whether it be for an investment or whether it be for futures, I personally would like to look at the 5-minute chart, only because it gives me an idea of what's going on. But really and truly, like, if you don't care and you're in it for the long run and you're going to DCA, then you don't need to be looking at the 1 hour or 5 minutes or 30 seconds or whatever. But that's just a personal preference, because I kind of like to be a bit cheeky and try and time my entries. But again, this is kind of like what I mean. Like, the more you guys do this, the more you kind of develop your own source with it. But